Hey there, it's Francis, and this is Gulfsands Petroleum. Just a quick epilogue, I suppose, on this particular uh, inverted HVF. It was a very good form, so this is why we focused on it so much, not because we're over fascinating, purely because it was in very, very good form. This was the primary inverted HVF. This was all downtrend before it, so if we take once again, just for those that are first to this clip, the weekly view, you could see after shooting star there through the 4 pound level, we had already one performing inverted HVF that gave us this level 91, which very much became our access for the next pattern, which was this one over here. So dropping down to that daily, that was our key pattern. We called for it to trade through to roughly the pound level and said it would make a good short with a stop just above that at £1.20 over here at 119, on the basis it shouldn't run the relative high 2 and that it was about to make a relative high 3. It did do that after trading through a pound, so typically key levels are often just run. So that was the call, much the way in our standard chartered call when we expected 15 pound, then 15.50. 15.50 was just run, also similar kind of level. So on Gulfsands Petroleum, that was the call of 102, and we then said it was going to run down through 30. We said it was going to do a 29p or 28 to 27p, depending on the various draws that we did. We got sub 30, which is effectively calling for in excess of a 70% loss of market cap for this equity. This is what eventually happened. We got our break through the 79 level. That was confirmation. So at that point, it became a live pattern. We broke down, met our interim, second chance back up to the funnel. Then we traded nicely down, sat on the line for a while, spilled a little lower, came back, found resistance at this level, spilled a little lower, and at that point made the second interim. You can see the second interim is now being run, got a strong, quite spiky reaction, almost back to the funnel there, and then went into a holding inverted HVF that then formed. And amazingly, this pattern also gave us the sub 30 levels as a target for this draw. Nice and clean, broke out, and once it broke out of this one, it was pretty consistent. So at one point we were up top here in and around the 64 levels, and before we knew it, we were through to 28 and we ran 27 as a low there. And that was done in quite short succession. December, January, and halfway through Feb, and we were done. So 2.5 months after the wind up to be done. Overall, this performed in decent time. This pattern had set up for quite an extended period, and it allowed us all the way through to May, mid-May to end of May. In other words, we take the timing from the first low, my apologies, to break. So that whole time period projected forward from here all the way forward, and that, if you draw the line, takes you through roughly to May. So we've made the target, as is typical with HVFs, well within time frame. Not exceptionally so. At no one point did it really go for it. And it did give you a slightly nervy moment at that juncture, but it was pretty consistent with its fall away in value from here down to there. When you bear in mind in percentage terms, what it meant for this company, these moves were significant. So if we turn this into a logarithmic scale, essentially you've gone on a massive fall here. These last tick moves here, where you're going from 64 to sub 30, you're losing in excess of 50% of value just in that move alone. So that's Gulfsands Petroleum. That is now done and dusted. This was our timeline, by the way. So I took that from our low one to the break and projected it forward. From the point that it broke, you can see just past this line, there was the breaking candle there, and that's what gave us into the mid-May area for the time frame. So that's the time frame of overperformance. So that's it on Gulfsands Petroleum GPX. Job done, short complete, trade closed. It's been a very profitable trade. It's been enjoyable. Thing to remember, you needed patience on these long-term setups. It's still taken, largely from the beginning part of June to mid-Feb to conclude. When you're talking about writing off, as I say, virtually 0.75% of a market cap of a company, this in the environment where oils are going up, we sat through the major Syria war potential that was brewing in the latter half of 13 until Putin put the brakes on that. It looked like we were hitting Iran and Syria. And now it's also more recently we've had oil prices running, they're well north of $100 now, after dipping into the low 90s, and they're into a breakout. So I've been calling on HVF theory massive runs on heating oil, Brent and WTI, and I'm just reaffirming those in the clip to follow this. And despite that, this oil exploration stock has just fallen through the floor. So there's more to this than meets the eye, and I'm glad that I was not a shareholder of this particular company during this time period. Anyway, that's it. Leave your comments, and this is probably it for this particular stock. Ideal inverted HVF though, perfect DNA for a technical setup and downside break, good targeting, wind up pattern, all of it, response at the interim levels there, and all of that. It's all been pretty textbook HVF theory. Want to find out more about HVF theory? Contact me, Francis, at themarketsniper.com, or you can also email on fthunt@gmail.com. Run courses, programs, and we have a virtual private network for all those that are members to capture exactly these trades. Look forward to hearing from you, and enjoy your trading and safe trading. And remember, this is for entertainment purposes. Nothing entered herein constitutes a recommendation in any way or form.